This is Fintech Insider News. This week, Revolut is launching in Peru on their way to 100 million customers. Affirm is rolling out Buy Now Pay Later for renters, and Stream has raised $90 million to expand in the US, and their CEO is here to tell us more about it. We'll be tackling all of this and more in today's news show, so don't go anywhere.
This episode is brought to you by Indeed. Stop waiting around for the perfect candidate. Instead, use Indeed sponsored jobs to find the right people with the right skills fast. It's a simple way to make sure your listing is the first candidates see. According to Indeed data, sponsored jobs have 4 times more applicants than non-sponsored jobs. So go build your dream team today with Indeed. Get a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
Hello and welcome to episode 1032 of Fintech Insider News, brought to you by 11FS, the 5-time consultancy of the year that works with financial providers big and small to build the next generation of financial services. I'm Kate Moody, Customer Strategy Director here at 11FS. And this week, I've actually been doing just such an amazing mishmash of different things, from looking at how we can support people with learning disabilities, access financial services, to thinking about community bank propositions in Canada, to thinking about financial health and financial confidence. So it's been a really, really crazy mishmash all week, but super exciting. More excitingly, the internet probably is dominated with memes this week focused on the fallout between Brooklyn Beckham and his parents, David and Victoria. If you're not invested in celebrity drama, good news, this week's Fintech Insider is a Beckham-free zone, but there is plenty of fintech drama to get into instead. To help me unpack it, I'm joined by a brilliant panel of guests. First up, we have a Fintech Insider debut for Nicolas Dipache, managing partner and co-founder at ADN.VC. Welcome to the show, Nicolas. Would you mind introducing yourself to our listeners and what you do?
Yeah, thank you, Kate. Thank you for having me, guys. I'm Nicolas Dipache. I am the managing partner of ADN.VC. We are a pre-seed and seed fund investing in Mexico, Colombia, Peru, and Chile. Right now, we back fintech and proptech founders at very early stage, usually MVP or no traction at all. And my background is as a fintech founder. I co-found a company in Peru called Kulki. It is a payment company that scaled to thousands of SMEs, and it was acquired in 2019 by Credit Corp, one of the largest financial groups there. And my background is in the intersection between product and technology and payments, and also I studied in service design in the Royal College of Art in 2023. And yeah, my passion is basically financial inclusion and technology. And thank you again for having me.
Awesome. Well, yeah, great to welcome to the show, and cannot wait to get your perspective on the news as we go through today. Next up, we have another Fintech Insider debut. Welcome, Sam Norman, City Reporter at City AM. Sam, always great to have new people on the show. Would you mind introducing yourself to listeners, please?
Absolutely. Thank you, Kate. So yes, I'm a journalist at City AM. I cover everything from economics to capital markets, but I take a specific focus on banking and fintech. Now that ranges from your big cap giants, your Revoluts and your Monzos, all the way to the smaller caps. I've got a real interest on covering different stories in the sector, deep diving into different analysis pieces, and diving into what is one of Britain's fastest growing sectors.
Fantastic. Well, yeah, thank you very much for making time to join us. And last, but definitely not least, completing a hat trick of debuts, we have Peter Briffett, CEO and co-founder of Stream. Again, massive welcome to the show to you as well, Peter. You have some very exciting news, which we're going to get into shortly. But before we do, please, would you mind telling our listeners a bit about yourself and Stream if they've not come across it yet?
Yeah, sure. So I'm Peter. I'm a co-founder of Stream. And what Stream is trying to do is provide fair financial services to everyday workers. And what that means is we're trying to undo one of the big unfair injustices in life, which is the fact that lower income workers have to pay more for financial services than middle income earners and high net worths. And we set up the company to try and figure out how to do that. And we realized that, if we just became a bank, we would be unable to achieve that mission because we'd see every individual as a risk. And if you've got low income or, volatile pay, thin credit files, very hard to serve you in the right way. So our model is a workplace finance platform, which actually for the first time distributes financial services to employers. And employers obviously see their workforce as their biggest asset and are willing to subsidize and pay for those services. So we're able to actually, provide a set of financial tools and services to workers that they just cannot get anywhere else because we're utilizing workplace data. We've got a very unique model. And for the first time in a lot of people's lives, providing fair financial tools that actually reduces the poverty premium, which is that amount more people have to spend if you're lower income on financial services, which is obviously something no one wants in society. So that's what we're set up to do.
It's pretty awesome. Well, yeah, looking forward to hearing about your news specifically and getting your perspective on the rest of the news as well. So thanks so much for joining us. Right, we have a panel on with the show. Our first story this week is Revolut seeks Peru banking license to expand Latin American footprint. So we're taking this from Reuters, but it's been covered in lots of places. And let's go into the detail. So Revolut has applied for a full banking license in Peru, making its fifth expansion in Latin America. The move is part of Revolut's push to reach 100 million customers by 2027, as it targets high-growth, underbanked markets. Latin America is proving attractive to digital banks driven by near-universal smartphone usage and large populations still underserved by traditional banks. A full license would let Revolut roll out more localized products, building on its existing expansion plans across Brazil, Mexico, Colombia, and Argentina. Nicolas, I think it probably makes sense to come to you first, given your expertise in the region. From a Peruvian, LATAM perspective, how significant is this announcement?
Nice. So I think from a Peruvian perspective, this is huge and very significant, right? I think this is just not another fintech launch in Peru. I think this is a huge endorsement of the Peruvian potential. Basically, in Peru, you have a banking oligopoly right now, where 4 banks have the dominant market share in lendings, bank accounts, payments, especially BBVA, Scotiabank, Interbank, and Credicorp, BCP, the largest bank in Peru. So I think the Peruvian financial system is really highly concentrated, few traditional banks. So Revolut entering this market with a full license means real competition, not just a wallet or just another payment app for the ecosystem. I think this is a clear sign of Peru as a global in the global fintech map, right? So in Peru, you have high smartphone penetration, you have a large underbanked population at the end, and a strong remittances flows, making very attractive for of course Revolut to enter to this market. And also you have a regulatory environment that is maturing right now. Peru has made very important moves recently, enable digital banks and expanding its regulatory sandbox. So Revolut applying shows that these changes are working and attracting sophisticated global players, even if approval takes 12 or 24 months, right? So the feeling itself is a big milestone. And finally, I think for LATAM, this fits Revolut regional expansion. They are building a multi-country banking footprint. I think this plays really well. Also because Nubank has no presence already in this space. So Nubank has a presence in Mexico, Brazil, and Colombia. So it's really concentrated on those markets. So I think it is a great move from Revolut to open Peru and other secondary markets, I think.
Yeah, and I think it's always a risk, right? People sort of dismiss some of these markets about actually taking the time to get to know them. I mean, I've got to confess, my knowledge of Peru before I started looking at this story was mostly orientated around jealousy of friends going on holiday to Machu Picchu and watching, Paddington and Peru. Yeah. Oh, yeah. True. But yeah, no, I think obviously just a super interesting market in terms of the population dynamics. I think obviously quite a strong concentration around Lima as well, I understand. So again, a really interesting, potentially for Revolut to kind of go to market. I think they could really focus on sort of trying to drive uptake in Lima and then sort of expand from there. Sam, keen to bring you into this as well. What was your perspective on this story when you came across it?
I mean, I think Nicholas summed it up quite well. Revolut is one of those brands. When Revolut moves, I think markets listen. They've become the titan of the fintech industry. They're the kind of second to none in that sense. I know you've got your Stripes and you've got your Nubanks, but coming from like a London perspective as well, Revolut's expansion just beyond Europe now, it's happening at such an accelerated pace. I think it's incredibly interesting, and the way they're going about it. I think we're going to see a real range of regulatory approvals and also just acquisitions. It's not something we've really seen Revolut dabbling incredibly. There's a lot of speculation if that's how they're going to get their US banking license for an acquisition, but I think that's something that we're going to see them maybe kick up a little bit notch to some of these license pursuits they're on. I do think a lot is still hinging on the UK one as well. I think that's what it always comes back to. I mean, London is their home base at the end of the day, and I think we see a lot of rumours over Europe as well, where a lot of the other countries are a little bit more hesitant to kind of give them the green light until we see the UK go forward with it. But I think the movement into Peru shows that they're not just waiting around Europe to give them a green light. They're still going to move forward. I mean, customer base is 70 million now, a valuation at 75 billion. They're not slowing down and just waiting on the UK. They're not taking one problem at a time. And I think, like I said, when they move, people listen.
Yeah, no, absolutely. Peter, what do you think of Revolut's international expansion strategy? Obviously, you are operating across multiple markets as well, right? But maybe not quite at this scale just yet.
No, yeah, it's not quite at that scale. But I was actually interested, Nicholas. Why haven't, because Nubank is a seriously strong, neobank, and has done phenomenally well in South America. So why haven't they moved into Peru, do you think, considering that's sort of their home turf?
Well, that's a great question. I think mainly because Mexico and Brazil are huge markets, and you need to be very focused on customer acquisition there, and the complexity there is very high. So I think when you combine extremely digital ready country like Peru and other countries in South America especially, with a huge financial inclusion gap, perhaps in the case of Nubank you need to focus on that places like Brazil and Mexico and Colombia, right? So they have a lot of work to do there and perhaps start jumping around smaller countries. For Nubank is not a great strategy right now, but for players like Revolut that they are building a global race for banking, I think it makes more sense for a player like Revolut. They are focusing on a different ICP, perhaps a customer more related to cross-border payments, freelancers who travel around Latin America, and I think they are targeting different customers at the end, right? Perhaps Nubank is more focused on the small merchant, the underbanked Brazilian or Mexican than and Revolut is more focused on the professional employee. So.
Yeah, no, that's for sure.
Yeah.
And what do you think their chance if they did move into Brazil, because obviously if you've got an archaic banking system, then a really good neobank's got a really strong chance of success, right? It's like 10x better than the incumbents. But because we share an investor with QED with Nubank, who've done and obviously they wax lyrical about Nubank all the time. It's a phenomenal business and a great brand, right? How do you think Revolut will fare in Brazil, which really is Nubank home turf, that has millions and millions of engaged users?
Oh, that's a great question. I think in Brazil, I think the play in Brazil is more is related to connect with other fintechs and create a value proposition of cheaper transactions at the end. And in Brazil, you have a lot of incumbents and you have a lot of technology, but I think Revolut value proposition is all-in-one financial products like investing, like savings, payments. So I don't think there is a Brazilian incumbent right now that has a fully value prop like that. So I think in terms of expansion, if Revolut want to enter Brazil, they need to. Well, they are in Brazil right now, but if they want to explode the Brazilian market, they need to understand better the small merchant segment. And also you have a huge PIX, which is the local payment method from Brazilians, which take over and bank almost 70% of the population. So you have a very strong public institutions working with payments and financial inclusion. So it's very complex, I think, Brazil as a market. So Revolut entering Peru with 4 main competitors as incumbents, and also a good regulation system, and also I think there is a great opportunity for them in these second countries, right? This the second market. What do you think, Peter, about this? Do you think it is a great move?
I'll wait on the sidelines and watch who wins. But obviously, if you do travel, Revolut is killer, right? So, but I'm mainly talking about the local population and the adoption. But yeah, more countries Revolut is the better, as far as I'm concerned.
Well, I mean, they say they've got 70 million customers. They're targeting 100 million by 2027. Sam, what do you think of that? Does that feel like a good stretch goal for them?
It's not a stretch goal. 100 million will come so soon. Like I say, the rate they're moving into these new markets. I was at their HQ launch when they did it a few months ago, and they announced the 10 billion investment worldwide. There's still so much more for them to crack, just in like the home region in UK and into Europe. And the rate they're moving into the others, I've completely got no doubt they'll do 100 million as a short-term goal. But it's where we go after that, and once they hit that maybe 100 billion valuation as well, where we go after that, it's going to be like they're quite beyond the milestone next step, I think.
Yeah. Okay. Well, we'll close out this story. Let everyone have their vote. Peter, when do you reckon they'll reach 100 million? Then we can just sweepstake and we'll check back in.
I think I totally agree with Sam. I think it's totally there's such a trajectory now. And I just think they'll do it beforehand, and they'll love to tell everyone about it as soon as it's achieved. Probably it could be even end of this year. I mean, it's an organic. I mean, if you think about the organic acquisition of users they have as well, once you get to a certain level, that's just bringing in every night they sleep, more and more comes in. So I think they'll hit that this year. End of.
Yeah. Well, I mean, I was looking. I mean, Peru's got a population of just shy of 33 million. So if they get 100% adoption in Peru, they'll get it without any other.
They only need Peru. It was only about Peru. They get it with that.
That's why they picked it. Nicholas, when do you reckon they'll get to 100 million?
No, well,
I think final vote.
Perhaps 2027. Latin America, I think, is a huge play for this vision of 100 million, right? But at the same time, you have in Latin America, especially in Peru, paytech-led market, right? Wallets, QR payments, remittances, a lot of FX. All of that scale in the past 10 years very quickly. Players in Brazil like Pix or in Peru like Yape change consumer behavior a lot, especially from account-to-account payments. So, and interoperability between banks. In the last 5 years, I think this was a huge movement in Peru ecosystem, and also you have a lot of local fintechs and international fintechs trying to enter in Peru as a hub. Also, right? You have 150 and 160 fintechs in Peru, Peruvian-based startups there, but also you have 190 South American fintechs playing a huge game in Peru. So I think it's the smartest way to launch Peru, to go to a banking, to apply to a banking license with the SBS, the Superintendency of Banking. And yeah, there is, I think there is I have a lot of excitement to see what is going to happen in the next couple of years for Peru and Latin America, especially that also you have a lot of crypto players tackling the region because of inflation and money movement needs. So it not will be easy, is for sure.
Yeah. It's the continental as well. I mean, I guess they're all exciting. They're in different ways, right? But it is a crazy exciting continent for fintech. So one we will definitely be continuing to keep an eye on. And we asked our community as well if they thought Revolut would hit 100 million customers by 2027, and 89% said yes. So it feels like a fairly safe bet. But we'll check back in and see if we were all right or not. Okay, on to our next story. This one we've taken from Fintech Finance, but again covered in a few different places. Stream raises 90 million in Series D funding to redefine workplace finance and drive US expansion. Stream, formerly WageStream, has raised $90 million in Series D funding, taking total funding to $228 million. Stream positions itself as a workplace finance platform. It started with earned wage access and now offers tools for saving, budgeting, planning, and access to affordable credit via employers. The company says it supports over 2,000 employers and 4 million workers across the UK, Europe, and the US, and the raise will help expand in the US and build out pensions and long-term savings following its Zippin acquisition. Again, Peter, probably makes sense to come to you first on this one. Firstly,
Sure?
Congrats on the raise.
Thank you.
I can throw it to someone else if you want, but it probably makes sense to come to you.
I can try. Yeah.
What can you tell our listeners about this round? What's it going to enable you to do next?
Well, there's two major things. The first is continue to evolve our product. We've seen a real appetite from our clients, which are large employers, for more financial services for their staff. The impact on their workforce from, improving financial health is just phenomenal in terms of better productivity, better retention rates. And if you think about it from a very high level, right? We sort of learn these things as we built the business and go along. But an employer is probably the most positive financial institution in most people's lives, simply because an employer pays you. It may be not as frequently as you want. It may be every 2 weeks or once a month. But it's incredible. It's where everyone else is trying to take your money. An employer actually pays you. And a lot of our financial services that we offer, whether it's flexible pay, whether it's great savings rates, which you can round down shifts, whether it's workplace loans, or whether it's financial coaching, are all built around pay, and those things are very powerful. As it is the number one benefit for people, for workers. I don't think anyone's ever turned up for a job and said, "Hey, I love all your benefits. I don't want the pay one. I'll take the fruit bowls or the massage classes." Pay is the benefit, and therefore building financial services around it, making it more visible, more real, really powerful. So and the reason I'm saying that is we've seen a real appetite from our client base. Think of the Asda's, the Next, the Green Kings in the UK for actually more financial services. So we really want to be able to build out, even more services than we currently offer, and that's why we're moving into pensions, etc., and sort of wealth management. And the second reason is after a few false starts, we've seen some real traction in the US, and therefore there's a huge opportunity for us there, just in terms of the scale of the US, but also the employers there and the scale of the employers there. So we're getting some really good traction there. So we wanted to make sure that we capture that, a lot more value in that market. So the raise is really down to those two things.
Yeah, no, absolutely. Well, no, that makes a ton of sense. I'm interested to understand, obviously you mentioned you'd had a bit of a false start in the US, but now you're seeing more traction. I don't think that's unique to you guys, and we've seen other players have similar kind of experiences. What do you think has changed that's enabling you to kind of get that greater traction now versus maybe your first efforts?
It's a good question. You always think, like, what's been a good British export to the US? Well, you could probably count on your fingers. It's not many. It's probably the Beatles, the Spice Girls, and maybe David Beckham, just because not Brooklyn, but David Beckham.
We're not allowed to mention the Beckhams.
sorry, apologies. But not many, right? And it is a different market. And we when I say false starts, we wanted to launch in the US. We had some partnerships there that were starting to get a little bit of traction, but we went through 2 iterations of quite an expensive US management team didn't work. Everyone will say a founder needs to move out there permanently because you take the domain knowledge and culture. But we found a way to make it work. And that was, really relocating our best sales, our best product people, our best client success, our best delivery team. And it made a phenomenal difference overnight because they take with them the culture, the domain knowledge, and they're able to start from day one. So I think, even in an AI world, people matter, and having the right people and team on the ground matters. And there is, in the reality, reality is there's a lot more competition for us in the US, but our proposition is different. It's more broad in terms of our products. So we're seeing a lot of appetite from the market there, and we just want to expand that. So yeah, but you have to have the right team on the ground to make it work. And obviously, you need to take some of the unique things you've got here, but I think it is a different model and a different go-to-market in many respects. So you've got to be conscious that you need to learn the market before you probably put your foot down. But having the right people has been, for us, been the game changer.
For sure. Keen to kind of give the rest of the panel a chance to kind of chip in as well. Sam, what did you think when you saw this news?
Yeah, I mean, I think it's interesting as well into the development of pension tech. I think it's an area that's kind of growing in the fintech ecosystem. I mean, as we speak today on 22nd of January, we've just seen JP Morgan. It looks like they're going to be acquiring a London-based pension tech. So I think it's quite an interesting, with the new raise, that's an area you're exploring. I mean, I'm going to ask as well, with the rebrand of Nutmeg and how JP Morgan are positioning theirs, is that something, I guess, you're acknowledging, Peter? And I mean, how do you digest as well when you're seeing how they're repossessing pension tech? I mean, it's just quite a flourishing area of the bigger fintech ecosystem. But I'm quite interested to know why. Yeah, I guess the path forward for Stream, sorry, old name WageStream, but
yeah, I mean, I think it's probably an acknowledgement by. I mean, certainly fintech are always looking for innovative solutions around, but for pensions, products are fundamentally broken, right? And people's relationships with them are fundamentally broken. And what I mean by that is people just don't engage with their pensions. And what happens is certainly with the workforce we serve, they may have many pension pots from various jobs that they've built up, because obviously it's a default now in the UK, which is great because it means a lot of people have pensions. But there's 31 billion pounds worth of money out there in lost pensions, people that can't find them, don't know they exist in some cases, or just haven't actually accumulated them. There's been a number of companies like PensionBee have done a good job of trying to consolidate those. But the fact is there's billions and billions of pounds of people's money, certainly, in our world, lower income workers' money, that have money there that they haven't been able to find. And if you are in the business of finding lost pensions, I can tell you it's not easy, right? Because the pension providers do not want you to find that money, and they don't want you to take it from their pot. So it's not easy, but the government's trying to intervene by making these things more visible and allowing other companies to compete. And then that is also allowing much more visibility on where these pots are. So I think that's also fueling some of the innovation. We acquired a company called Zipin, a pension provider that's been incredibly useful for us to try and help us with that sort of, with our find and combine product. And even in our beta program, we found 8 million in a matter of months in lost pension pots we've been able to accumulate and put back into the hands of our members, which is, if it's found money, it's incredibly positive, right? And even though it can't be released until you reach a certain age, it does mean that, our product set's broader than just, okay, we want to get people out of debt with flexible pay, we want to get them savings, but that piece at the end of someone's wealth spectrum should be pension. So I think you're going to see us, but also a lot of other companies innovating in this space, because A, there's a real need for it because the system's broken, and B, there are now government interventions which are making it easier to find those pots that are lost.
Yeah,
I guess. Sorry, Kate. I was going to say, I guess it does speak to the nature of being a fintech or a neobank in general as a challenger. But I think it's almost like a new landscape for the fintech ecosystem to challenge the incumbents on. I mean, when you look at some of these old financial services and banking giants who've been challenged on the maybe current account or like savings front, it does seem like pensions might be a new frontier with this. And then I just think it's an interesting time to speak about this when we have seen, like just today, I say the JP Morgan reference, it does seem like it could be a new frontier.
I think so. I mean, if you think about, our core product actually isn't, earned wage access. It's Track, which gives people total visibility of their earnings in real time, because we're accessing those workplace systems. So we can see every shift you do, the monetary value of that. We show it to people in real time. And then we link it to open banking. So it's like a financial Fitbit. This is what you earn. This is what you're spending on an hourly basis. That is checked 4 or 5 times a day by people. It's incredibly engaging, especially if you're a shift worker and you don't know what you're going to get paid every month. So that visibility is key. And then you get all the way to the other end of the spectrum with pensions. No one hardly ever checks their pension. It's hard to check it if you haven't, got an app. So, but why not? Why isn't your pension a part of your financial, pie? Why aren't you checking that? Why aren't you making sure you're optimizing where that fund sits in terms of the return and stuff like that? So I think the new world of pensions is going to be very much visibility, getting people to understand what their pension pot is, getting people to see how important that is for their future life. And right now, I mean, you can ask everyone on this call how many times you check your pension, or have you ever tried to consolidate your pensions? Because we've had investors cry in front of us trying to consolidate pensions. Right, it's a very difficult thing to do, and therefore, why can't that be a better world for people? So that I think that's that's how we look at it, and I think it should be much more engaging than it is, and right now it's not.
It really isn't, no. Nicolas, keen to get your perspective as well. I mean, have you seen anything similar to Stream in your markets? I mean, again, maybe this is our pitch for Peter to come to Latam.
We're coming to Peru. Hey, coming.
Please.
Revolut beat us to it again. They keep beating us to these countries.
No, it will be amazing. And I have a question around, beside visibility and how you spend money and how you earn money. I think financial education in your value prop has been part of the product from day one, right? How this education and coaching part evolved since the first investor or the first MVP to these days, and how are you planning to evolve with this very important part of your value prop, like financial education?
Yeah, no, it's a great question. I mean, it's massively evolved, because the more data we have, the more valuable our financial coaching tools can be, right? I mean, we start with visibility. So if you are a shift worker, often you don't know what you're earning that pay cycle, right? You've got different shifts, different rotas, different overtime amounts. So showing people in real time what they're earning, linking it to their spend through their current account with open banking, gives that visibility. And that's the first stage for us in their financial, in financial education and coaching. And then you can tell, we can show people, for instance, look, in 2 weeks' time, we can see what you're going to earn. We can see the shifts you're going to complete this pay cycle. We can see how much you're going to earn, but you've got a Vodafone bill that's due in a week's time. That's going to take you into overdraft. A, you're going to pay overdraft fees, and B, and these are just prompts. And do you want to do another shift to cover that expense? So you can really coach people in terms of what their financial picture is at any one time, and we find that very valuable. We started with our financial education product was more like static reading materials, but we quickly realized no one gets home from a day's work and wants to read the budgeting brochure your company sent you, right? So we really like our coaching to be all AI driven now, but real-time information based on your personal financial situation, and also prompting you to try and do different things. I mean, even things like savings, we found, when we tried to deduct from people's salary, there was more friction there. People didn't quite like, you can't take any of my salary, but we can round down people's shifts because we see everyone's shifts. And that went from like a 5% participation rate with workforces to 40%, because it took all the friction out of saving. So now, in the UK, we've got hundreds of thousands of people saving for the first time in their lives, whether in the hospitality, retail, healthcare industries. And then we're educating them on what do you do with those savings. We put it into a high interest account for you, get daily interest. So for us, education is much more trying to take action rather than just read materials. And as you know, the data we have now is so rich that everyone's financial life is different and everyone has different needs at different times. So we're knowing what those needs are and then providing educational tools around that particular need is the way that we get really engaging educational content. And I know, when our clients see their workforce building up these big savings pots, makes a huge difference to how that workforce feels about their finances. So those are the benefits of it, I think.
Yeah, it's phenomenal. Well, I mean, congrats again on the raise. I think I can speak for like the whole panel and probably like the whole of 11 person saying congrats to the team. And yeah, really excited to see what you guys do with it, because I think it's pretty apparent that there's huge potential to this as a way of intervening soon.
Well, we'll try and find the lost 31 billion before Rachel Reeves gets her hands on it to try and fix the economy. So the race is on.
Or before Revolut reached 100 million, we'll see who can do it first. So yeah.
Yeah. Or before Trump takes it, considering he's taking everything else at the moment.
Yeah. Well, on that note, we're just going to take a quick pause here. We'll be back very shortly.
Hey folks, if you're anything like us, you're on the road constantly. Airports, hotels, conference centres, half the time the Wi-Fi feels as safe as shouting, "My PIN is 1234" across the departures lounge. That's where NordVPN comes in. One click or no clicks with AutoConnect. And suddenly, every sketchy airport network becomes a whole lot safer. You still get blazing fast speeds and 8,700 servers in 129 countries, so you can switch your virtual location while you're waiting for yet another delayed flight. One account covers 10 devices, and you get Threat Protection Pro to block malicious links and ads, plus Dark Web Monitor if your details show up where they shouldn't. We've teamed up with them to offer Fintech Insider fans an exclusive deal. Head to nordvpn.com/Fintech Insider to get a huge discount and 4 extra months on top, completely risk-free with their 30-day money-back guarantee. Links in the description.
Now, a quick break from the headlines for something we've just announced. We're bringing Fintech Insider News, the very podcast you're listening to right now, live to London's Village Underground on Tuesday, the 17th of March. Hosted by David Breer and Ross Gallagher, it's your chance to spend St. Patrick's Day with your favourite Fintech Insiders, plus over 200 other Fintech nerds. If that sounds like your kind of night, grab your free tickets now at 11fest.com/afterdark. And now back to the news. Okay, our next story we've taken from the papers, and that is Affirm to provide buy now, pay later to cover rent. Buy now, pay later company Affirm has been planning to roll out its instalment loans to renters in collaboration with Isuzu. Isuzu delivers financial education, credit reporting assistance, and emergency zero-interest loans to tenants. Affirm say that select renters who choose to use Affirm through Isuzu can apply to pay rent in 2 equal payments every 2 weeks at 0% APR, with no hidden or late fees or compounding interest. Affirm underwrites every application individually, and it approves people for what it believes they can responsibly afford to pay. The initiative is currently in its pilot stage and is yet to be formally launched. Peter, is it fair for me to come to you first on this one? I mean, I'm intrigued to see, this is obviously a market that you're entering, and it's probably going to have an overlap with maybe some of the types of individuals that you're offering could support as well. What was your take on this?
Yeah, no, it's interesting. I don't know, how that's being secured. But yeah, it's like almost everything you purchase now online has a BNPL component to it. So it's natural that I guess this would also fuel out to other big payments in your life. I mean, rent is, depending on, where you are in the world, is probably your biggest single outgoing from your wages. So, it's just making sure, I guess, that it's done very responsibly and people don't, aren't, as with all these things, take renting, spending money on rent that they can't afford, and then you're sort of building up a big debt pile over a period of time. So I think that's probably the biggest challenge for that one. But hopefully they've got safeguards and vulnerability stuff, structures in place. But yeah, it's a big purchase. It is the biggest purchase for many people on a monthly basis in terms of their biggest outgoing. So yeah, proceed with caution.
Yeah. Sam, what did you reckon of this one?
Yeah, it was an interesting one. On a personal level, it makes me a bit jittery. I'm not the biggest BNPL guy in my personal use. I can see its pros, and I cover the market a lot, and I think it's a very necessary market function. But me personally, I'm just not someone who I like to pay all off straight away. I like some big ticket items make sense, but I don't know, something about your rent as well just would feel quite unnerving doing it. But I think it speaks to like a bigger narrative around BNPL. And I think globally, though, it kind of depends where you're looking at how the narrative is shifting. I think here in the UK, especially with like the regulatory crackdown, it's kind of been they've kind of been slapped down and like had a little slap on the wrist, a lot of BNPL firms, despite not doing anything extraordinary. I mean, there's obviously there is some cases, but they kind of came out swinging, the regulators, for the BNPL firms in a way that was maybe not warranted. I mean, they called it like the Wild West. And don't get me wrong, there is obviously a lot of that element to it, but there is a need for a functioning BNPL market. Now, whether that includes renting, I don't know. I don't know what ventures with personal philosophy and also what's needed for the market, but it goes without saying that I think it opens up a lot of access for people, and I think it's like a necessity in the market.
Yeah, I totally agree. I think buy now, pay later is moving for from nice to have purchases to essential expenses in this case, right? And I imagine this in Latin America, it will be a great feature because a lot of problem with rents in Latam isn't overspending. It's more about cash flow timing, right? You have 60% of population underbanked, informal. So I think this will create a second scoring to people have more access and to have a better cash flow structure for their payments. So yeah, I think if they launch here, will be amazing to see how it goes.
I think, yeah, I think you summed it up there. The way it's embedding with a lot of big, not just big ticket purchases. We're not talking about a laptop here. We're talking about your rent, and I think that speaks to a bigger thing. Like BNPL isn't a problem. It's actually a symptom of a bigger problem that people need to use buy now, pay later on their rent. I mean, so I think that speaks to something that probably goes a bit beyond fintech, but it's a bit interesting that that's a market. And I mean, I guess if is it appropriate for companies to be capitalizing on a demand like that? Where is this demand coming from for BNPL to be used for rent? But then I guess, again, it speaks like a bigger thing that if it's okay for people to do it on a laptop and open up access, then what's the difference with your rent? But I do think it speaks as like a symptom to a bigger issue in global economies.
I think, yeah, I mean, there's also a customer element to this as well. Like, I think, I don't obviously know the founders at Isuzu personally, but we've definitely had them on the show in the past. Like, we know that Isuzu in particular are a very customer-centric organization. And they've worked for a long time with renters, helping them to use those rent payments to build credit files, to kind of fill gaps in sort of thin credit files. So I feel like it will be driven from a good understanding of the customer. But I suppose to your broader point, Sam, about I think just with the whole emergence of fintech, managing money on your phone, the movement away from cash, I think especially for these lower income workers, it's become so much harder to manage your money because your money ends up spread across lots of different places. You have your salary that comes in one day, but then your bills will come out on different days. Maybe in the past you probably had a physical pot of money, and that was your physical cash salary that you would earn, and then it was really easy to track. It was really easy to see what was left and what went where, and people used to. We see lots of examples of people going back to the 7 jars where you put your physical cash in jars. Like, I think there's so many positives in the fintech world and using all of these digital platforms, but actually for people that have the greatest pressures on their salary, I think the mental burden could be huge.
Yeah, I thought about this from I'd rather you sort of paid your rent daily. So if you see how much you're earning every day, because we have that shift information, then breaking down the amount you earn, this is how much of that shift goes to rent, this is how much goes to your bill. So people have total clarity over their earnings and their outgoings. And I'd rather sort of people paid their rent daily, and then, then you could do another shift and whatever, and then you end up at the end of the month actually of paying for that. But it's a challenge for everyone.
Yeah, it's kind of like what percentage of your salary is already spoken for, I guess, is
that's
kind
right,
of
because people don't naturally think about that, but actually in some cases it could be much more of a portion than you want it to be. So it's just knowing that is part of the reason for solving it sometimes.
Yeah, I think. Yeah, I think it does make a lot of sense. But I mean, when you've got these people who are like so many in a cost of living crisis, I guess, living paycheck to paycheck, it just amplifies a lot of those pressures. But I don't think I have any doubt in my mind when you look at some of the companies. I mean, look at Klarna. You can never mention BNPL without bringing Klarna into it. Their intent, it isn't just right. It kind of has to be right because I think they are so highly regulated, and I think a lot of these firms, Affirm included, hold themselves to such a high regulatory standard. So when we are getting this crackdown in the UK, and we're talking about this Wild West, it's quite interesting because Zilch and Klarna, these are people who've already been adhering to quite high regulations. And so, I mean, Zilch was one of the first to be already prescribed by the city watchdog, the Financial Conduct Authority. So it's, I think with the BNPL landscape is very interesting, and it's no coincidence we're seeing a firm like Klarna try and quietly ditch that label as well, but while still continue to operate in that market because it is a booming market.
Yeah, no, absolutely. And as you say, I think as Nicholas was mentioning, I think as more markets become more and more developed in the fintech space, I think we're going to see this, how buy now pay later is applied evolving as well, because each country will have its own cultural context, its own specific customer problems that it can be applied to, hopefully for good customer outcomes. But I'm sure we'll see some mishaps along the way. Okay, well, we'll keep an eye. Obviously, it's only in pilot, so we'll have to see what comes out the pilot and how it's applied. But we'll keep an eye on it. Our next story comes from City AM, and that is Wise reports jump in users ahead of US dual listing. Wise recorded a 26% surge in cross-border volumes to £47.4 billion in its latest quarter as its customer base swelled. Wise said it now served nearly 11 million users, up by a fifth from the year prior. Wise shocked the city last year after announcing plans to ditch its primary listing in London in favour of New York. It now expects to complete its US dual listing in the first half of 2026 as part of its mission to accelerate global growth. Sam, again, just being fair, makes you broke this story for City AM. So, what beyond just what was in the story as you wrote it? What was your take on this? What does it say about Wise's long-term ambitions?
Yeah, this was a really good update for Wise. I mean, this was third quarter and we're coming off their half year, and just comparing, I mean, the best way to summarize it. So Wise, I don't know how Wise shares closed up yesterday, but they closed up pretty high. I think at one point they were up 8%. I don't know if they held that throughout the day, but it was a positive market reaction. Let's compare that to half year. They were down 10% after the update. They managed to claw that back and only finished down 1%, but it just goes to show you those brash market reactions when the market first opens and we digest the result. That's a lot of the times how we interpret this, like these raw numbers. And I think this was a good update for Wise. It was also a surprising one. Again, at the half year, when we compare that back, profit was down, I think it's 17% on the year prior. They'd flagged a lot of administration costs. I think they were up 27%. And this cost of this dual listing, that was going to be a really big thing in the forthcoming year for Wise. So the expectations weren't low, but the expectations were from the half year were like, they'd set them that it was going to be a costly for this expansion. And this wasn't anything particularly concerning because there were costs they were prepared for, but it didn't. When they then would come out on in the third quarter and say, actually, our previous profit target, we're going to be at the top end of that. That was probably the best thing they could come out and say, when we were more expecting maybe a bottom end or a medium. Obviously, you said it right there, the cross-border volumes going up 26%. They've had a major bump in users. I think it was a pretty good update for them. I think they've come out of it probably quite strong, and now they're looking to really seal the US dual listing in the first half of 2026. And I think the team said they were on track for that in the update. So yeah, I think it was quite an upbeat one for them.
Oh, Sam, I was going to ask you, because you're the man in the know about this. So why did those cross-border transactions go up so much in their user? Have they done anything different, or was it new geos, or was it something else that drove that growth? Because that's pretty phenomenal.
To be honest, on genuine specifics, I have no idea, but I imagine it would tie into just a higher volume of users. I know the expansion's been for another one really pushing forward with the expansion. And I think people really underestimate how global Wise is as a brand. And in the US specifically, I think a lot of the numbers came from the US, not entirely certain on that, but I think, when you're growing more, obviously more users means more cross-border volumes. But right. 26% is quite a pretty strong one for the third quarter. And I think that's really helped them pick it back up after a costly half year.
Yeah. I mean, definitely don't have the precise numbers, but my understanding was, they're kind of having relatively good traction in the US. They're also kind of moving into, I think they're sort of just starting to kind of set up operations in Mexico, growing rapidly in Brazil. Nicolas, do you have a perspective on Wise in LATAM?
Yes, I think they also have a great opportunity here, but my take on this news is, I think Wise is thinking much bigger than Europe now. The growth in numbers are very solid, but the real story is the US dual listing. Wise is basically saying this is where our next chapter happens, I think. And also it's about access to deeper capital market, to be more aligned with geography and product strategy. I think that's a clever strategy. And also Latin America is, I think, for those players are empty space right now. You have oligopoly, like I said in the Revolut news. You have oligopoly banks there, and there is no clear winner at the moment. And depends on the product that you are launching and on your value proposition. I think Wise has a similar value prop that Revolut in that space. So if Wise wants to tackle Latin America deeper, they need to have more presence here, and they need to understand the type of economy that moves here, and at the end, it's about focus and execution.
Everyone's coming to Peru.
Not just Paddington.
That's right.
But yeah, I mean, obviously it's been quite a dramatic time for Wise, right? I mean, when they announced the splitting of the listing, it created a split between the founders. The one of the co-founders ultimately ended up leaving the business after trying to encourage shareholders to vote against switching to the dual listing. So, I mean, Sam, was that sort of split as much a surprise as the listing? It's quite impressive that they are seeing these numbers despite having had so much turbulence internally, right?
Yeah, I mean, the founders one was an interesting one because I think I don't want to butcher the names here, but I think it was Henricus. He left as chief executive a couple of years ago, but he maintains, I think it's a 5% share through his investment vehicle. Now, his problem wasn't necessarily with the listing; it was the way they were putting it through. They were putting it through as a package that was going to change the voting rights. And the voting rights, I think the way they work is they have a super voting right where certain shareholders have a bit more of it's like a 10 times authority on their like a super vote, and this was going to extend by I think 10 years the super vote, and they've kind of packaged it in with the transfer of the listing to try and subtly slide it through. So the big headline was one of the co-founders is opposing the listing. In a sense, I don't know how much it was that to do with the listing, but I know it was a lot to do with the package of the shareholding vote. But I mean, when that came down to it, it caused a bit of drama, but I think it passed by over 90%. So it was never going to cause waves. It was really the announcement of the dual listing, but I mean, it kind of rocked, and it still has continued now. I think it's one of the most significant stories I've rated in the last year in terms of the fintech realm, because it kind of, anytime I meet a fintech who's a listing hopeful, who the chancellor's probably really hoping to court for the next cohort of IPOs in the city, I always think, well, what about Wise? And one of the boss of a fintech unicorn recently told me that the Wise path is probably going to be the path that we see a lot of fintechs, and that might even be the sense that some do float in the city, they list in the city, but then they're gonna scale up and then take all that liquidity over to the US because that's where they want to go. I mean, Nicolas touched on it earlier. Wise said they want an access to deep liquidity, and if you're going to do that, it is going to be New York at some extent. I mean, despite all the government initiatives that they want to do right now, Wise did lay the issues quite bare, and it was a brutal kind of assessment. I think I was on the media call at the half year, and I asked him about it, and because there was some rumours, I think, that Wise was going to try FTSE 100 promotion at some point and really progress from the city market. And I asked him, I was like, what was the difference? And I think they said in their report as well, they're really now looking for that major US indices. So, I mean, they basically say that when you read between the lines, it's basically saying NASDAQ over FTSE 100, which is quite a cruel assessment, but it's also a bit of a kick up of the arse, I guess, as well.
Yeah. I mean, Peter, I'm seeing lots of head nodding.
Well, no, Tavet's one of our investors, actually, so everything he does is right and correct. We are supporters. Whatever he votes, we vote with Tavet. No, I'm kidding. No, I mean, it's a great bit. I mean, there was a bit of back and forth with that, but it was more around the voting rights, as you rightly said. And I think, at the end of the day, it's a great business. I think it's gonna do extremely well. It has got that same foundation, remittance as Revolut, right? So it's interesting. They've sort of founded that, and then they've obviously built on a neobank on top. So it's going to be interesting. This competition is started in London, but it's playing out globally now. From Revolut and Wise and stuff. So it's going to be really interesting if they can actually capture market share in the US as well, which has got dominant players like Time. So it's very exciting.
Really, very exciting. I mean, all fintech news is exciting, but I feel like we've had an excellent run of all of them. Lots of excitement in particular today. So, okay, on that note, we're just going to take a quick pause here. We'll be back very shortly. Okay, now a quick look at one story we don't have time to cover in full, but still deserves a shout out. We've taken this one from FS Tech, and that is WeLab raises $220 million in HSBC-backed funding round. Hong Kong-based WeLab has closed a $220 million Series D funding round backed by HSBC, among other investors. It is their largest ever single round. WeLab hopes to use the investment money to increase its presence in Southeast Asia, diversify its product range, and acquire more customers. It already serves more than 70 million individuals and over 700 businesses across Hong Kong, the Chinese mainland, and Indonesia. The funding will also support the company's ambitious AI strategy and Google AI partnership, which they intend to embed in all areas of its business. Well, yeah, I mean, just another big shout out to the WeLab team. It wasn't the reason why we included the story, but we did actually work with the WeLab team a few moons ago in the kind of very early stages of their product development, and I think they've got a really great proposition. And it's also good to give a shout out to sort of the Southeast Asian market. Obviously, we've talked a lot about Europe, the UK, North America, LATAM, but also just phenomenal growth and exciting things happening in Southeast Asia as well. So really excited to see how they deploy the raise. And yeah, I think interesting really to see how they're diversifying across Hong Kong, the mainland China, and also Indonesia. Some really divergent and different markets as well. So excited to see how they roll that out. Okay, and finally, one more very weird story which has taken the internet by storm this week. We've taken this one from Gizmodo, and it's an app called Are You Dead is climbing the Apple charts. Are You Dead is climbing the Apple App Store charts in both China and the US. How does it work? Well, users tap a button each day to confirm they're alive. Miss 2 days and the app emails an emergency contact. According to the article, it's gone viral partly because of its blunt name, but it's also tapping into a real trend: more people living alone, Asian populations, and families spread further apart. I mean, first thing, I guess, US and China, so probably unlikely. Does anyone have it? Anyone got the app?
I don't, but now I feel I have to get it and I have to tap in. Otherwise, yeah.
Yeah. Nicholas, are you gonna be looking for this in LATAM?
I think there is a huge opportunity also there, like everything. But this app shows that people perhaps don't always want complex solutions, and perhaps people is tired of really complex solutions, and they want to. And also, it's in the intersection between low friction and more people are living alone. Populations are aging. So there is this quiet anxiety around what if something happens and nobody notices at the end, right? So it's really interesting that right now is on the top of the charts.
I think it's a fad.
Yeah, I mean, always things are very novel, right? But like, what do they do next? Like, it's once the novelty of not being dead wears off, like what's the next thing they add to the app, or is it just a one-hit wonder?
That's right. Yeah, exactly.
Are you dead? Are you nearly dead? Are you ill? Are you feeling a bit off?
Are you ill?
Yeah. Sam, what about you? What do you reckon?
You know what? Like, I do think it's a fact. It's not something that I imagine we'll be talking about in a month's time. But I actually think it's quite good. Like, I think, in a sense, obviously, there's a practicality element to it. But I also think it opens a bigger discussion, because I guess my first thought was, yeah, it might be practical, but like, it's a bit of a vulgar name. But also, it's not. Like, I think it does spark like a bit more of like a social conversation. Like, are you dead? But like, we should be having these a bit more like frank conversations. Or just being a bit not I guess not about.
I'm hoping people realise I'm not dead.
Yeah, but just being not able to talk about it. If you're doing it with someone like a relative who like lives alone or something, not being able to talk about death is this like taboo thing. Not to get really sociological on you, but like not being able to talk about it as some like sort of taboo thing, and just like, oh, check your app today. There's a funny element to it. There's a practical element to it if you've got like an older relative who lives alone, and then also I think it really does like dilute the taboo and the fear around it, and I think it opens a lot more human conversations. I mean, that's quite a deep answer, but I actually think there's a lot of net positives, but I don't think it'll be here in a month's time.
Well, they're talking about renaming it. So I mean, Peter, you've been there with a rebrand. What's your advice to them?
Well, I'd just say, I don't want to rename it Dead. You wouldn't want to shorten it. We went from Wavestream to Stream, so I'm sure they'll come up with a more innovative name than that. But they probably need to think about what another product is, because I'm not sure Are You Dead is going to last too long. So maybe they need to expand their range.
I think they need to go to just Are You? And then
that's true.
It starts with Are You Dead? And then the next thing could be like, Are you something else?
Are you hungry?
Are you hungry?
Are you awake?
Email someone, but you're hungry. I like that.
Look, this is it. We've given them too many ideas. They'll be top of the charts all year.
Their consultancy fee will be hitting their desks very shortly. So, I mean, is there anything fintechs can learn from this stellar success story?
Well, I think like Nicholas nailed it. Simple works.
Simple works. Take things, taboo subjects, destigmatize them, make them fun. I mean, we saw, we had, lots of advertising campaigns, I think, with, I'm trying to remember the name. There was it's going to kill me now that I've forgotten the name. There was a great insurtech that was doing something very similar. Oh, it's going to kill me now. Okay, well, listeners can email me and tell me the name of it because I'm being silly. Or maybe, the producers arrested me. Dead Happy. There we go. That was
Dead Happy.
They did some cool stuff in this space as well. Thank you, production team. Well, that brings us to the end of today's show. Thank you so much to today's guests. Where can people find out a bit more about you and your companies? Nicolas, I'll come to you first.
Yes, thank you very much again for having me. You can find more about ADN in our website, adn.vc. If you're a startup in Latin America, in the fintech or proptech space, we want to hear from you, and you can apply from our website. So thank you very much again. You can find me also on LinkedIn, Nicolas Dipache. And see you in Mexico, in Peru, in Argentina, guys.
Yeah, you just send me the ticket and I'll be there.
Yeah.
Sam, what about you?
Well, thank you very much for having me. I already look forward to making my return. You can find me on Twitter posting at Sam Norman Writes, on LinkedIn at Samuel Norman, or you can find me on the pages of CityAM online at cityam.com, or in distribution bins on Tuesday, Wednesday and Thursday around the City of London.
Fantastic.
Oh, very good.
And Peter?
Yeah, you can find everything you need to know at stream.co. But my advice is, if you want flexible pay, if you want the best savings rates on the market, if you want the best credit products, if you want to find those lost pension pots, go and see your HRD. We work exclusively through employers, and demand that he or she launches Stream immediately. We're
going to see
beautiful.
A wave of sit-in protests around the UK now. Yeah, absolutely. And we are not responsible. We don't bear any responsibility at all. And as for me, you can find me on LinkedIn, Kate Moody, or you can drop me an email, kate@ellenfest.com. And that wraps up today's episode. Thank you so much for listening to today's show. If you like what you heard, please make sure to follow us on your favourite podcast platform of choice. And if you really like what you've heard, why not share the podcast with a colleague or a friend? As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcast@11FS.com. Thanks again and goodbye.
Well, the holidays have come and gone once again, but if you've forgotten to get that special someone in your life a gift, well, Mint Mobile is extending their holiday offer of half off unlimited wireless. So here's the idea. You get it now. You call it an early present for next year. What do you have to lose? Give it a try at mintmobile.com/switch.
Limited time 50% off regular price for new customers. Upfront payment required. $45 for 3 months, $90 for 6 months, or $180 for 12-month plan. Taxes and fees extra. Speeds may slow after 50 gigabytes per month when network is busy. See terms.